Hi guys, welcome back to another weekly analysis video. In this video, we're going to talk about Nifty. Nifty is being moving in a very choppy manner. The month of October, we had single direction move, nearly 1400 points, one direction move. Before that, in the month of September, we had this choppy pattern. Before that, again, this choppy pattern. So this entire overall structure, what is it? How do we plan for next week? We'll talk about that. Before that, I have one good news and one sad news. The good news is that we are following our intraday pressure signal system. And in this system, we had the short pressure signal on Friday, exactly in the time zone. This is both Nifty and Bank Nifty. You can see on the left side, Bank Nifty, there was nearly a fall of 460 points. In Nifty, nearly 170 points. So this is the good news that our pressure signal, we had a very wonderful, like perfect pressure signal here. What is the sad news? Sad news is that I could not capture any of this. The reason was I follow a very strict system where we have 4 rules to filter out all these pressure signals. So we have 4 rules. In that 4 rules, 3 were satisfied. Fourth one was not satisfied, and that is why I decided to sit out. And when I decided to sit out, then later I saw this market has given us a very big move. Now, that is not the sad part, actually. This is not the sad part. And the main reason why I'm highlighting is that this fall, suppose this fall is 170 points in Nifty, this can become 500 points fall next week, right? Same thing in Bank Nifty, this is nearly 460 points. This can become 1,000 point fall next week. How? Let us discuss that first. Now, let's quickly look at the chart of Nifty. If I zoom out here, I've discussed this a lot in the Telegram group already. I highlighted it 3-4 times. I'll just quickly help you understand the pattern here. This pattern is a diagonal pattern in the form of an expanding form. All right. So expanding diagonal, how does it look like? It simply looks like this. Let me just draw it for you. Okay. So in this case, the most important part is that if I place this 1, 2, 3, 4, 5 like this here, the most important part is that wave 4, this wave 4 has to come inside wave 1. This is the only catch for a diagonal. And then we have a very fast wave 5. This is expanding, right? So every wave becomes bigger and bigger. After that, what happens? After this, what happens? It gives a fast fall. It gives a fast fall. This is case number 1. Try to understand this. This is case number 1. First case is that here market finished a top and we are going to fast fall. In that case, what will happen? Your minimum target is this point here, 25,000 to 25,200. 25,000 level will take this range here. What is this range? 25,060 to 25,327 is a little bit too much. We'll take a smaller range here. This red color candle. Okay, so 25,050 to 25,300. This is our first target. Forget about big fall, 1,000 points, 2,000 points fall. First, focus on this part. Okay, this is our target on the downside minimum. When it comes here, we'll plan for something else, the further part. Okay, now there is a level at this point, which is our confirmation whether the market is going to fall or not. Should we plan for this bearish setup? We have to focus on one level here. I'll talk about that. That level is nothing but your 38 to 50% zone. So when I just zoom in here, we just go to 1 hour chart. Okay. So this is the latest rally in the market. So far, this is the latest rally in the market, correct? So here what we're going to do is we are going to draw our Fibonacci retracement level. Like this, we just draw our Fibonacci retracement level, mark 38 to 50% zone. Okay, this is your 38 to 50% zone. And now what we're doing is simple analysis here. If market has to rally more. If market has to rally more, then 38 to 50% zone must be intact. This will give us a low risk buy on dip scenario. Clear? I'll just mark this level for you. This is near 25,700 and 25,580. All right. This zone has to be intact. Only then we can expect a rally on the upside. Question is, what if this zone breaks down? What if the zone breaks down? This, like I said, our target on the downside will be 25,300. Now, why are we taking this zone? Because I'll tell you, because in the first scenario, what did we have? Higher time frame analysis, this expanding diagonal. All right, this is one of the expanding diagonal, and this can cause a fall all the way down, 24,200, 24,500. That level also can come. But before that, we are keeping a small target of this region. Now, why is this the main target? Simple reason that there is another case here. There's another case where market can also do this. Market can also do this. Okay. So in this case, what will happen? That, like I told you, the only main character of this ending diagonal or any diagonal pattern is that wave 4 here, it should come inside. It should touch the high of wave 1. It should touch the high. That is minimum requirement. So question here is, what is the high of wave 1 here? It is coming here, right? 25,153. It is coming inside this zone again. Simple. So that is why I told you this is a minimum requirement for wave 4 to come. So wave 4, if this is the case, if this is the second case I'm talking about now, if this is the second case, then we will look at something like this. Market will go higher, and market can easily reach 25,000. It can easily go to ATH. That is not an issue. ATH will be a secondary point here. It can go beyond ATH also. That is the target. Okay, ATH will be the target if market comes and makes a move like this. So our deciding point will be here, this consolidation area between 25,060 to 25,300. Okay, so we will decide later when the market reaches. Main important point for next week is that market should first break this zone. Market should first break this zone. Only then we can plan for this. Okay, if this zone is intact, then market is going for the upside directly from here. We can plan for a reversal from this point onwards. Simple. That is a very simple analysis, nothing complicated here. Now the question here is regarding time analysis. Like I told you, we have your yearly time zones, and now we are in a major cycle. In a major cycle, what are we expecting? We are expecting some major move to start, nearly 500 points to 800 points, at least some move. So the last major cycle, minor cycle again is giving very powerful moves in the market. If you look at this point here, we had a very good rally in the market from minor cycle. This is a major cycle in the month of September. And then we started a directional move here, nearly 800 points move. Same thing, a major cycle started in the month of August. This is also a big move in the market. Okay. So what do we want is, we want some major move to start from this time zone. Simple. Now, the major cycle here is from your October 30th to 6th of November. That is nearly next week. So here, very simple. If we want a major move to start, low, this is the expectation as per textbook, as per the time cycles, it should be a low here. But there's something called inversions. Time inversion, instead of low, we can get high also, depending on the market structure. So what we do is, we follow price action inside this time zone. We follow wave theory. All right. So right now, what do we have from our analysis? We had that 38 to 50% zone. So as long as this zone is intact, then we can plan for a major move on the upside. Now, if this zone breaks, then yes, we can see a major move on the downside towards our this zone here, correct? We had a secondary zone. Now this part, if it comes before 6th, very good. If it comes before 6th, very good. We can plan for a good big move in the market. Let's say nearly 500 points, at least minimum 500 points on the upside from here. All right. Now all this is fine. Question here is, what if market decides to give a big downside move? Question to you, ask you is, how do you trade this? How do you trade this if market gives you a big downside move? Let's say market falls like this continuously non-stop. Where is my entry point? That's the question. So if you look at the structure here, I've told you many times that whenever you want to enter in the market, it has to be a low risk setup. All right. Now, how do I know what is the low risk setup? If the market is moving in one direction down, you need a pattern like this. This is one of the patterns going up. You need a continuation pattern. This kind of pattern is very important for you. This is called a continuation pattern. Let me just highlight it. Okay, this is the kind of a pattern you're looking for. You're looking for a pullback, call it pole and flag pattern, or it can be a sideways move also like this. Okay, and then you are looking for a continuation pattern like this. So let the price come back. Again, I'm telling you, it's very simple. If you're worried that market is going to run away in one direction, wait for price to come back to some resistance, let it give some correction. And then when it starts to fall down, look for an N pattern on the downside. Okay, look for this kind of an N pattern on the downside. It will be very simple. Your risk will be limited. Okay, now question here is, sir, I'm looking for a bottom. You want to look for a bottom. And this point, same thing, bottom or reversal pattern is this. This is a kind of a reversal pattern. Now, let me leave you with some important information here. If you look at this chart of Nifty 5-minute, sorry, this 15-minute chart, I'll put the FRVP or fixed range volume profile. From the top, I'm taking the top candle here. From the top to the red color candle, the most recent red color candle. What is the FRVP telling you? Again, if you don't know what is FRVP, we have 4 lectures already available on YouTube. I've already shared the details, and every detail I've shared about reversals, operator activity and all that. All my personal settings also, I have shared there about FRVP. Now, here you see, when I applied it from the top candle to this red color candle, I did not go to the green color candle. Okay. So far I've applied it on the red color candle. I'll do it again for you. I'll apply it again and show you. I've selected the FRVP tool, top candle to the red color candle here. So what is this telling me here? It is telling me that major operator activity is over here in this zone. This is the POC. This is the value area. All that is fine. All right. Note this. This is the POC level of the operator. So major operator activity has taken place in this. Now, what I'm going to do is I am going to shift from this red color candle and I'm going to move it to one candle further. Okay. We'll do that. We'll shift it from the red color candle. Now what I'm going to do is I'm going to remove FRVP. I'm going to shift it now. Same starting point is same. I'm going to shift. Before we had red color candle. Now let's move it to green color candle. Boom. So what has happened here? You can see the operator's activity has now shifted to this zone. The POC, the value area shifted POC has now shifted to this zone. So how do I find where a reversal will take place? What is the price structure? How should FRVP behave before a reversal? This I've discussed in a separate video to the exact point, how to find reversals using FRVP. I'll see you there in that video.